How's it going? I'm Andrew with Investors Hub, and let's do our quick introduction, then we'll get to the interview. We're talking with Dan Caplinger. He writes for the Motley Fool, and we're going to be chatting with him about the overall EV market, some of his predictions for the future, and we're also going to be talking about some companies in particular that are in that sphere. So, let's hear from Dan. Please note that our videos are not designed to be direct investing advice. We're here to gather the perspective of different investors. Our channel and our content should just be one stop on the journey of trying to find out where to put your money. So we'll start with a pretty general question, Dan. What is your opinion of the overall EV market right now?
So it's interesting. I feel like the electric vehicle market, it's continuing to go through this transformative process. And so from a business standpoint, we're seeing a huge amount of innovation. We're seeing a bunch of companies with great ideas, not just in terms of different types of vehicles to manufacture, but also the different technologies that go into them. I see, it's just this rapid growth situation that is always appealing to investors. Now, from an investing standpoint, it's a lot different. I see the EV market is pretty frothy right now. There's a lot of capital that's looking for places to invest. It's largely indiscriminate in terms of, what the company's focus area is. Just about any company that has anything to do with EVs right now can get bids and can get investment capital. And so, you're seeing those valuations that have been going up, not always with an underlying business that currently supports it. And so a lot of investors, it's clear that they're just hoping that the companies will grow into this huge addressable market. It's admittedly a really big market. There's plenty of room for winners, but not every single company is going to win. So, it's going to be interesting to kind of see how those dynamics play out. Sort of like we saw with the internet 20 years ago, the internet was a huge success and the most successful companies did really well, but not every company that had anything to do with the internet did well. In fact, a bunch of them really failed. I think we're going to see the same thing happen with the EV market over the next several years.
So I was reading an AP News article, and they were talking about the $3 trillion economic investment plan under Biden's administration. And part of that plan is going to be renewables and EV charging stations. So whenever someone is, or do you think that whenever people are investing in these EV companies, are they investing in them in a market vacuum with sort of laissez-faire policies, or are they expecting a government windfall?
I think that they are definitely expecting some kind of government support, whether it is in the U.S., definitely in Europe. Europe has a big history of subsidizing renewable energy. It's going to continue to do so. China has indicated its willingness to support its electric vehicle industry. You've got some major players there domestically within China that are standing to get a big part of their market. And so, yeah, I think any EV investor is kind of counting on a level of subsidization of the market in order to kind of help it going forward. Now, as far as a specific program is concerned, yeah, you probably see ups and downs based on speculation about, how big is a program going to be? How specific are the terms of that plan going to be in terms of helping EV companies specifically? Are the subsidies going to be reserved just for consumer purchases like we've seen? Or is there going to be some sort of direct provision to help the businesses themselves as they develop their EV technology? Lots of unanswered questions. And I think you'll see volatility as those negotiations happen. But I do think in general, yes, EV investors are kind of counting on, continued assistance in addition to, a strong free market that's really demanding these vehicles in favor over the conventional gas-powered vehicles. I think both of those factors are coming into play in justifying bullish investors in their views on these stocks.
So whenever the government starts spending money, they do have to pick companies that are going to be receiving the funds in order to do the work. But do you think that the rising waters will raise all ships, or are there going to be individual companies, like just the particular companies that are contracted, that see the benefits from this spending?
I think it's going to be a little bit of both, and it's going to depend on the level of specificity of exactly what we're talking about. For instance, we saw recently that Workhorse Group, when the post office was talking about awarding a contract for updating its fleet of delivery vans, there was a lot of speculation Workhorse would win that bid. That sent the share, prospects for that sent the shares of that company up. Then when it turned out that they didn't win the bid, shares went down. And it looks now like Workhorse is challenging that determination. And so, we've seen the shares kind of move up and down as investors try to decide how likely that is to be. And so a lot of it depends. I mean, there's some companies that stand to win regardless, especially, the companies that don't make the vehicles themselves, but make the technology that goes into them. In some ways, they don't care which of their, they supply potentially a bunch of different companies. They don't care which company wins as long as somebody wins and their parts go into that company's vehicle. So they're going to be more geared towards the health of the EV industry generally. But yeah, you're going to see some situations where a specific company, if they don't get the award that is justifying their share price, then it's gonna tank. Conversely, if they get an award nobody expected them to get, then their shares are going to skyrocket. So yeah, I think you're going to see some big winners and some big losers. And then you're also going to see some companies there's kind of more neutral to specific awards. They just need a healthy industry overall in order to succeed more broadly over the long run.
So I want to narrow it down a little bit now and talk about a bigger company. So where do you see Tesla's share price being in 12 months? Now, I've gotten yelled at for asking for a specific price at a specific time. So sort of generally up or down or flat. What do you think?
It's funny. Price targets are so mercurial, but here's the thing. Tesla is a stock unto itself. It has a very strong following of fans. There are some people that I believe if they can't buy a Tesla vehicle, they're not going to buy a vehicle. It's a situation where they have built such a brand, such a following, such a level of customer loyalty that they will be able to do whatever they want to. And so as long as the stock market kind of cooperates with that thesis, I think that it has the potential to go up. And so when I was thinking about this question, I was sort of like, okay, if I had to pick a price target, what would I pick? I'd pick $1,000 a share. We're at about $650 now, so that's a pretty sizable increase, but it's not that much above the roughly $900 a share that it topped out at earlier this year. And so, from that standpoint, it's not necessarily all that ambitious. Now, I will say this: I can easily see scenarios where that stock does not do that well. And if we see some sort of change, not really in the fundamentals of the EV industry itself, but rather in the way that stock market investors are looking at this space, then I could see Tesla running in a situation where its shares, are flat or even down over the next 12 months, just as the company's business prospects kind of catch up with it. But I'm leaning more towards the bullish scenario at this point, just because we're still in an environment where there aren't very good alternatives to stock investing, and I still think that investors are going to like high growth stocks in this environment, and Tesla has demonstrated its ability to do that. And so that's what pushes me towards that $1,000 mark.
So what EV companies are you paying attention to over the next year? Either ones that you think are going to be extra successful or ones that you think are going to get hit by the stick?
It's one of the most interesting market opportunities for EVs right now, in my opinion, is China. It's a huge market, biggest population in the world. Rising economy, so a rising middle class of folks wanting to aspire to, kind of high-profile consumer products. They have a huge vehicle pollution issue, and so the Chinese government, I think, is even more aligned towards promoting electric vehicles than you see in the U.S. A couple of companies that I follow there, you've got NIO, N-I-O, and then you also have Xpeng Motors. Both of those are kind of early stage folks, but they do have vehicles in production and being sold. They're both showing high levels of growth in deliveries and in production as well. Have ambitious plans. I'm going to be curious to see how that plays out. Vis-a-vis, you've got Tesla gearing up production in Shanghai to serve the Chinese market. Tesla's fan base does extend to China, and so you're going to get some buyers who are going to prefer those vehicles. But in China, the domestic play often has a big competitive advantage, and so I think that will serve NIO and Xpeng well. Those two companies also have the potential to expand across the Asia Pacific region, which I think is also geared well towards EV growth in the years to come. And so, kind of seeing how those competitive dynamics work out between those two Chinese companies and Tesla, I think will tell you a lot about whether you do have that sort of rising tide lifts all ships scenario, or whether you have definite winners and losers going forward. Among conventional automaker plays, I'm increasingly intrigued by Volkswagen, which is, it recently talked about kind of ramping up its electric vehicle production significantly. Again, Volkswagen has that benefit of being in the European market where renewables, have already had a big following, more of a, more interested in fuel economy, more interested in, making sure that you have reliable vehicles that can meet basic needs. You also have, the level of geographical concentration. Things are a lot closer together than they are in the U.S. It makes range a little bit less of an issue, and so Volkswagen has a good home market to work with. It also has a good reputation in the U.S. And so as they start to push forward with their plans, both to enable greater battery technology as well as increasing vehicle production as well. I think that some of those vehicles are going to come to the U.S. market, and it'll be interesting there again to see kind of how do those competitive factors play out. We've seen current EV offerings in the U.S. that aren't Tesla. They've gotten sort of a mixed reception. But I think Volkswagen has a different kind of consumer brand vibe in the U.S. and I think that it potentially has better prospects for getting penetration into the U.S. market than we've seen so far, from stuff like the Chevy, or from other companies here in the U.S. And then finally, among companies, I was talking earlier about suppliers who don't build vehicles themselves but build the components that go into vehicles. I'm intrigued by Quantumscape. That's a company. It specializes in sort of next generation battery technology. Most of the current lithium-ion batteries that we've seen have a fairly high weight to battery storage ratio. That sort of limits their expansion capability as we move forward. Quantumscape uses a different scientific method that packs potentially more charge into a given weight of battery. It also uses lithium, so those companies that are providing lithium are also a good place for this, but it'll be, I think that most experts agree that we'll need to see battery technology evolution in order to help mass adoption of EVs going forward. At this point, the question becomes scarcity of resources and also just, kind of the physics of the current technology limiting the application to some users. If we get some advances in battery technology, that can change, and I think Quantumscape has a good inroad to making that happen.
Any final thoughts?
The EV market is always going to be interesting. It's going to be volatile. We're going to see big jumps. We're going to see big falls. Anybody who's investing in individual stocks in this area, you need to be prepared for a rough ride. I'm optimistic about the industry's focus going forward. I think that it has a great potential to eventually replace what we're seeing in conventional vehicles. The question is whether it's going to be this generation of companies that we've got right now that are leading the charge, or whether, as we've seen in other industries, a lot of these sort of first generation EV companies might end up failing in favor of second generation companies that haven't even been created yet, that kind of learn from the lessons of the first and take them in new directions that end up being more successful it's a big case study. We're right in the middle of it, and it'll be fascinating to see how it turns out.
Do you have any positions in the companies mentioned?
Let me take a look. No, I don't own shares of any of those companies.
I appreciate you guys watching. And if you like the video, be sure to like, comment, and subscribe. It's the best thing you could do to help us grow. And I'll see you again soon.